Welcome back to The Dive. Our guest today has over 25 years of experience in the mining industry, including working for major gold miners. He will deep dive into gold from a macro perspective, inflation, COVID's impact on the miners, uranium, and where he sees the opportunities this year. He is the Chief Executive Officer at GoldMining Inc. Alastair Still is joining us today. But before we bring Alastair on, just a quick reminder to smash that subscribe button for me, please. Hey, Alastair, welcome to The Dive.
Thanks for having me on. Pleasure to be here today.
Yeah, it's so great to have you. All right, so this is your first time that we've had you on the show. So why don't we start off with gold from a macro perspective? How do you view gold's price action since March 2020?
Well, I think what we can clearly see with the price of gold, it's been on fairly steady state, and we've been hovering in and around an $1,800 US price range recently, but there has been a little chop in the waters. And I suspect that as there's some uncertainty in the various markets, uncertainty about inflation, that will cause various insecurities in the market. And I think invariably that will cause people to keep pushing back towards gold, and it still underpins its fundamental investment as a hedge against inflation, a protection in troubled environments. So I see the price being stable going forward and actually rising. And we're at a nice plateau right now at 1,800, but I see plenty of upside to go further up.
Okay, great. So in Fed Powell's recent statement, he commented that inflation is slightly worse than it was in December and will likely start reducing the size of its balance sheet at some point. What impact do you think a hawkish Fed has on gold at this stage?
Well, it's an interesting question. I think we've all seen firsthand the impact of the inflation. We just have to go to the grocery store or buy any consumer goods, and we're seeing that in our pocketbooks at firsthand. So inflation is real. Consumers are seeing it. It doesn't seem to be slowing down at this point. And I think fundamentally, and even if there's a slightly hawkish view from the Fed, I think fundamentally it puts back to where people want to have security. In uncertain times, I think they want to go to currency, and the currency here we're talking about is gold, which trades very fluidly, very liquidly. It's a physical product. There's only a finite amount of it ever created. It has a true store of value, and I think in these uncertain times is when people will actually move towards investments in gold.
How much of a problem do you think inflation is for Joe Biden?
Well, Joe Biden has a number of issues, and there's also a number of sort of global issues that are not just affecting the U.S. but globally. Of course, the pandemic with COVID-19, of course, is global. That's an issue that President Biden will have to resolve. We have got some troubling situation developing with Russia and the Ukraine. There's a sort of a global situation potentially unfolding. We've got inflation. So a number of factors, again, all point towards instability. And I would say that historically over time, when we have had those times of instability and uncertainty, people go back to their go-to product, which in this case, I think should be gold. And I think that would really steer an investor into something like GoldMining Inc., our company, which is a very large inventory and resource of gold and silver and copper resources all within the Americas. So it matches well to our investment hypothesis about why someone would want gold, and in particular, why someone would want to invest in GoldMining Inc.
So what has COVID done to the mining space? Has it affected production, or has it changed the way miners are operating?
It's a very relevant question in today's society because we've all been impacted in one way or another by COVID. But I think what it has shown is that the mining companies are excellent operators. In compared to some industries, the disruptions have been lesser and minimalized, I think largely because mining companies have such high standards for operating, such high safety protocols and procedures that they have been able to stay in operation. They have been able to keep the safety of their workers first and foremost. So it hasn't had as large an impact. That's not to say it hasn't had any impact, but I think it goes to show that the operators of gold mines today are very modern operations. They're very sophisticated, and they're very much focused on health and safety of their workers.
So for our viewers, we have to ask, gold is up over 30% over the last 2 years. One would think this would lead to producers' cash flow increasing, leading to stock price gains. But we haven't really seen much of that with the producers. Why do you think producer stock prices haven't responded?
That's sort of maybe that answer ties back to your earlier question about inflation. I think as much as the gold price is rising, the producers have also been fighting inflationary costs on their bottom line. So perhaps the margins haven't been as robust as many would have expected. However, I think overall, the producers are doing a very good job operating. They're having strong operating margins. Many of the larger companies are paying a dividend to their shareholders. GoldMining Inc., our company, we created a new company last year called Gold Royalty Corp. We did an IPO on that. We own 20 million shares in that company, and that's now paying out a dividend. It's just been announced. So we have cash flow coming in from dividends. So I think that's an important piece here on the operators, that they, maybe the share prices are lagging a little bit, but they are showing solid returns. They are paying dividends. I think that's a great sign for investors going forward.
Definitely. It sounds good. Okay, so let's talk about uranium for a second. Uranium prices are at about a third of their all-time high. How do you view the uranium trade right now?
Well, the uranium trade is such an interesting piece, and you might find, well, why we shifted to a uranium discussion when we're talking with a gold mining company or a company with assets in gold. And maybe it's a little known fact that within the gold mining portfolio, we actually have a sizable uranium property. Our Rhea project, it's a large package of land in the Athabasca Basin, part of Canada, which is home to some of the highest grade uranium mines in the world. We have 125,000 hectare property there. So a very large land package and some very prospective ground. And we're very bullish on uranium. I mean, as you say, prices are only about a third of what their all-time high is. And there's a big push towards greener energy and reduced carbon footprint. So there's a demand for uranium going forward. And I think that highlights an opportunity within the gold mining portfolio. Maybe we do a spin out of our Rhea uranium project. We see juniors in that part of the world operating today with $50 million and $100 million market caps on much smaller land packages with less prospective ground than we have. So maybe that's an opportunity for a spin out, or an opportunity to unlock value from our existing portfolio.
So looking beyond gold and uranium, where are you seeing opportunities for the year?
Well, I think in general, again, the push towards a greener economy is going to push towards battery metals, elements, but fundamentally underpinning all that is that will be demand, I think, for copper. And gold mining, our company, has a significant inventory of copper. We have 43-101 resources with copper containing some 2.7 billion pounds of copper. So we have exposure there. It makes up about 18% of the commodities in our portfolio by value. And I think copper not only will go into the making of vehicles and new technology, but the grid system to deliver the power to charge these vehicles and provide charging stations. That's all driven by copper and the wiring and the infrastructure needed. So as the demand for vehicles grow, and maybe the demand for batteries changes with different elements and metals as the technology improves, fundamentally underpinning all that will be a need and a demand for copper. And I think the price for copper will stay high. And I say it's nice that we have a co-product or byproduct copper on a couple of major projects within gold mining, which I think will add a potential upside for our investors as well.
Okay, so one more thing before I let you go here, Alastair. What can investors look forward to? Any key catalysts for GoldMining Inc. for the first quarter?
Very important question. We have recently put out our first preliminary economic assessment, our first PEA, on our La Mina project in Colombia. That showed very robust economics, good economics. So we'll be releasing the full details of that coming up. We're also working on additional PEA studies. In particular, we're doing work on our San Jorge project in Brazil. It's a very nice open pittable deposit there with high grades, near infrastructure, in a great jurisdiction in Brazil. We're continuing to advance on that. We'll have news coming out on that project. So there are some catalysts. And as well, we talked about the Rhea project, our uranium project. Maybe we can unlock that. And also within the portfolio, there are a number of other assets which we would like to emulate the great success we had last year of a spin out of Gold Royalty Corp. Can we do that again and replicate that sort of $100 million addition to our balance sheet by possibly unlocking another asset within our portfolio? So lots of exciting catalysts in a great market to be investing in gold right now. We're very excited for what's to come for us.
Yeah, awesome. It sounds so great. Very exciting stuff. We'll have to have you back on to discuss it further later. Thank you so much for joining us.
I look forward to being back again. Yeah, thank you very much.
Thanks so much for watching today. We'll be back again tomorrow, but in the meantime, why don't you check out one of our other videos?